Dan, you just mentioned the fact that you were over in Asia. I'm curious what you've learned from a supply chain standpoint. And when you talk about the fact that this is a risk-on trade right now and you're confident of tech's move higher, I'm curious, because of that rate cut, are there any specific sectors or areas within tech that you think are poised to benefit the most?
Yeah, I mean, demand's outstripping supply 15-1 from a chip perspective. It's actually incrementally more bullish than even a few months ago when we were in Asia because of enterprise demand. And look, NVIDIA is the only game in town now, but the use cases are exploding. That's bullish for hyperscalers. You look at Microsoft, Google, of course, Amazon. And I think it just shows this is about $1 trillion of incremental AI capex over the next 3 to 4 years. Big tech's leading it. The sovereigns ultimately will get it from a government perspective and other enterprise. And that's why I view it. This is still 9 p.m. in the AI party that goes to 4 a.m.
Dan, let me get your take on one big theme that played out this earnings season, which was big tech was spending on AI, but investors had some new questions, right? I mean, you did hear that kind of bubbling up. Where is the actual return on all this AI investment? How are you thinking through that dynamic, Dan?
Yeah, look, Josh, you obviously know tech, as well as anyone. I think we're in between this sort of CapEx massive tidal wave and where you've actually seen the numbers come out where you're gonna see the monetization from a software perspective. You've seen it in Microsoft, seen it in Oracle, seen it in Palantir, ServiceNow. But the second, third, fourth derivatives, all of our checks are showing when we go into December, you go into March, you go into June in 25, that's where I think numbers come up significantly higher. And I think that's where, even though we've seen some sort of soft spots, obviously with Salesforce a few quarters ago and others, I believe this is just an air pocket, and ultimately we're going to see numbers go a lot higher for software.
Dan, are there any macroeconomic risks, though, that you are a bit worried about? You're viewing rate cuts as a bullish move or a bullish sign here for tech, but just more broadly speaking, that risk of recession is still not going anywhere, right? Some on Wall Street are still worried about that. Are there any macroeconomic factors that you're closely watching?
The Bears have been worried about recession the last 2 years, while tech's just continued to rip higher. And they'll come out of hibernation mode here and there over the coming months. You got the election, of course, in terms of some of the risks, but it just, as we talked about, this is a fourth industrial revolution. And that's not changing if it's 25, it was 50 bips. It's not changing regardless who's going to be president. This is an unprecedented tech spending environment. Fed cutting, I believe, just makes it more of an autobahn in terms of what we're seeing for tech. I'm not saying everyone's going to benefit, but in terms of the AI revolution, the winners, that's why I believe over the next 3 to 6 months, we're looking at NASDAQ 20,000.
Dan, well, I have you. Let's switch gears a bit here. Talk Apple, another name you cover. Big day on Friday. That new iPhone hitting store shelves. How should we as investors think about that, Dan? Is this going to be another iPhone supercycle?
Look, I mean, it's a matter of when, not if, that this is an iPhone 16 supercycle, an AI-driven one. Now, obviously, a lot of, the bears talking about pre-orders and trying to, obviously scared many investors earlier this week. Josh, in Asia, no one was expecting pre-orders to be up massively. It's actually in line with expectation. This is all about as Apple Intelligence rolls out into the December quarter, into March. That's why I believe this will be the largest Apple iPhone cycle that we've seen. I think market's better digesting it the last few days, but we're going to continue to sort of navigate. I mean, the haters will continue to hate on Apple, but I believe this is ultimately a $4 trillion market cap in what I believe in 2025.
Dan, talk to me about the catalyst that you think this is going to be. I guess more specifically here, when you take a look at Apple over the next couple of months leading up to this super cycle, how much of that has already been priced in the near term?
Oh, I don't think it had. I mean, I think actually market's underpricing where units go. I think units could ultimately be up high single digits, potentially double digits. Market call it 5% in terms of overall growth. 300 million, and this is most important, that 300 million iPhones have an upgrade in 4+ years of 1.5 billion iPhones. That's setting up for an unprecedented upgrade cycle. And look, the AI revolution now is coming through Cook and Cupertino. And I believe 20% of the world over the coming years will access AI through an Apple device. And I just think this is one where the street is underestimating what the consumer AI revolution is going to mean to Apple stock.